Here are the top stories we'll be watching this week. All eyes will be on the Brexit vote by MPs in the UK. The latest economic survey from the US will give clues on the possibility of a slowdown. And results will be out from the big US banks, including Wells Fargo and Goldman Sachs. First, to the crucial vote this week in the UK on Prime Minister Theresa May's Brexit deal to leave the EU. The House of Commons vote was called off last month by embattled Mrs May, who is facing defeat. The PM's deal, which covers the terms of the UK's split and the framework of future relations with the EU, has already been agreed with EU leaders, but needs to pass a vote by MPs before it is accepted. The UK is due to leave the EU on March the 29th, whether the deal is passed by MPs or not.
After the PM was forced to delay the vote, politicians will finally get their say on Tuesday on the Prime Minister's compromise deal with Brussels. But once again, MPs and commentators, and even Number 10, expect she's going to lose the vote. What next? Well, she's got 3 days to come up with something different. Who knows whether or not that will be possible, but that's something that MPs have demanded after changing the rules of the game last week. Then the Prime Minister is expected to reach out to Brussels and EU officials after the extent of her defeat is realised. She will be looking for further legal guarantees over the backstop, something that Eurosceptic MPs and the Democratic Unionist Party, who support her minority government, are fiercely opposed to. But in the meantime, we'll probably see MPs coming up with alternatives. That could be a Norway option, a second referendum. Labour, of course, will be calling for a general election. But now, as is expected then, there still appears to be no consensus for what sort of Brexit Parliament wants.
In the US, looking to the new year, few economists are expecting a recession in 2019, but concerns about the implications of a Chinese economic slowdown and fallout from the US-China trade war are growing. This week, the Federal Reserve brings out its beige book, looking at current economic conditions. Sam Fleming, US economics editor, tells us what to expect.
The regular diet of economic data that comes out of the government has been cut back because of the federal government shutdown, which has meant that many US government statisticians aren't currently working. That doesn't mean, however, that no economic data is coming out this week at all. One particularly important report will be the Federal Reserve's monthly beige book. This is based on feedback that the Federal Reserve's regional banks get from local business executives on topics ranging from prices to wage pressures to manufacturing activity and so on. This comes at a time of some uncertainty about the next steps for Federal Reserve policy. There have been signs of slowing growth globally, and yet the US economy still appears relatively buoyant. And we'll be seeing what the Federal Reserve wants to do next when its meeting comes up at the end of the month. And that will obviously be a key moment to watch as we gauge what lies ahead for Federal Reserve interest rate policy. Until then, the beige book is one interesting indicator to keep an eye on.
Staying in the US, the earnings season for banks begins this week with Citigroup's results on Monday. Shares in the big 6 American banks fell by an average of 14% in the last month of 2018. So investors are bracing themselves for the results against a backdrop of the growing concerns about the path of US economic growth over the next year. The FT's US banking editor, Laura Noonan, has more.
The good news is that earnings themselves should be pretty solid. Analysts are expecting the 6 banks to report an average increase of around 25% in fourth quarter pre-tax profits. And that's despite the market's chaos that defined the end of the year. Wells Fargo, which took a big litigation hit in the fourth quarter of 2017, is set to be the most improved. Goldman Sachs, whose business is the most exposed to the vagaries of the markets, looks set to be the worst, with pre-tax profits up just 3% year on year, and that's before factoring in the impact of litigation provisions for the 1MDB scandal. After-tax profits will be massively up across the pack, since banks took big accounting write-offs at the end of 2017 after President Trump cut the corporate tax rate, reducing the value of their deferred tax assets.
And finally, in the Balkans and Eastern Europe, Russian President Vladimir Putin is set to visit Serbia this week and meet his counterpart Alexander Vučić, who has faced weeks of protests against his government's influence over the media. The visit comes at a time when Russia is facing increasing trade and political isolation. Russia's Balkan ally is pushing for an agreement over Kosovo that has ignited controversy over Serbia's efforts to join the EU. Mr Vučić has stated he was in favour of partitioning Kosovo, site of the last war and the breakup of former Yugoslavia. In recent years, Mr Vučić has walked a diplomatic tightrope between Russia, which shares cultural and religious ties with a country of 7.2 million people, and the EU. But Russia backed Serbia's stance of never recognising Kosovo, while the EU has said normalising ties with Kosovo is key to Serbia's EU membership application. And that's what the week ahead looks like from the Financial Times in London.